Welcome to today's team training. Today, we're going to do something a little bit different. We're going to use a walkthrough instead of some type of a pre-built presentation. As this stuff is coming up, some of the stuff you guys may know, some of the stuff you may not know. It's designed to help you with your proficiency of the program for your own personal use and to help clients out. Also, remember, moneymaxaccount.com is a great site to learn more about the Money Max account program itself, read articles, frequently asked questions, our history, how do we get here, how it works, reviews, tons of information on that site. So please make sure you check that out. And we're going to roll right into the back-end program demo. Remember, in your settings, you have a reset account button. In your reset, you have a bunch of different demos that you can use, of which I use 90% of the time. I'm using this one, checking savings method, the fourth one down, you're using most of the time. If you have a potential client that wants to see a home equity line of credit as the offset, that's called the classic. And if I'm talking to a real estate investor that has multiple properties, this multiple property demo has 10 active mortgages in there. So they can see that. Once again, most of the time you're going to be here, you reset the account, and then it'll reset to the original. As you are walking through here and as you're learning the program for yourself or for your clients, understand that the dashboard up here is where we're trying to get to. Also understand you can organize this, or your clients can organize this any way they want, but essentially this is how a lot of our clients like it. When's the payoff date? How long is my financial journey? And when you are running custom savings reports for people, this is the interest that we've identified that we can cancel out, or elimination of the bank's profit, of which they've actualized zero. As they start to actualize it, this number will start to catch up with this number. How do we get here? Through the action plan. The action plan is the financial GPS instructions that are going to lead you or your clients to this end destination. Very easy. It's color coded. And our job in the action plan is just to let the program know if this happened as expected, happened differently, or didn't happen at all. It's color coded with the green for your income, the blue for a debt obligation. These are offsets. We'll talk about that in a minute. And the black, whether it be like a power bill, a phone bill, or a food and dining bucket, these are recurring expected monthly expenses. Depending on the offset strategy, here we're looking at savings. The offset strategy for a savings is we're going to use a discretionary cash flow. We're going to put it in a high yielding savings account, earn the most possible interest that we can. And then once that money's ready to be deployed back into the debts, that's how it's organized. For a home equity line of credit, let's go right back over here for a minute. Inside the settings, inside your preferences, if your clients have more than one offset account available, it will let them know, is there a differentiation in time? And if you click on it, 171,721 to the line of credit, you can also see, is there a differentiation in potential interest savings? So right here, we can tell, is there a difference in time? And by clicking, is there a difference in potential interest savings? The difference between checking and savings, once again, you're using a discretionary cash flow to put it in the highest yielding savings account you can, deploy that savings into the debt as instructed by the program. A line of credit like a HELOC is a little bit different of a strategy. You want to think of the HELOC strategy as a revolving door. And not only is your debt going to be paid off through this revolving door, but your expenses and your income, everything goes through that home equity line of credit. Why? Because it's an open-ended loan. The way that's amortized and the way that the interest is calculated on the daily balance. So we're using everything to push those daily balances back down as far as possible to avoid interest. Also, the way this is amortized with most of the time, a 10-year draw and a 20-year amortization, of which in the 10 years, you can pay interest only. Works out well for some people. We also have insurance contracts as offsets, so we have education on. We're going to go right back to here to the checking savings. That's what we're studying today. And if your clients have multiple savings accounts that'll be listed here, they can switch offsets. If somebody, some bank dramatically drops their savings interest, they have other ones. They can, look at all the different ones here. Whatever one they pick here will show up as the offset. Also, in your emergency fund, it's got low, medium, high, what they recommend. You can also put anything you want. Notice in just a minute, this emergency fund setting will also show up in the savings account. The very first thing this program will do is make sure that our emergency fund is paid in full. It's up to the level of the metric level that we've set. And so that, when we have emergencies, when we have unexpected expenses, we're not going back into debt. We're not creating a house of cards. We've got money to fall back on. Also, the payoff strategy here. The payoff strategy is simply how regular or irregular is the income coming in. The front bookend right here just means, hey, this is like W-2 income, salary income. This is recurring, expected to come in, at certain intervals, bi-weekly, twice a month, monthly, whatever it might be. The other bookend I use, I really don't use the middle one. This one would be like if you had somebody, like for example, like a real estate agent that may be on commission, that maybe they sell a few houses a year. So it's irregular income. This couple, John and Rebecca, they have regular income. So that would be how we would set the offset strategy. So going back over to our action plan, what we're looking at here is, once again, the step-by-step financial GPS instructions. When we're using savings, the blue is an accumulation. Most of the time, it's going to go into savings. You can always see the date, from what account to what account. So right here, we're taking money from savings, putting it into checking. Why? Because they have a minimum account balance they need to uphold in their checking. Most of the time, we go to checking to savings. The blue is the accumulation. The green-blue is the offsets to debt. That's with the right amount of money at the right time to the right debt to do the most damage to the amortization schedule, to cancel out interest, cancel out payments, and get us closer to our end destination. Once again, our job is just to tell this program, did it happen as expected, differently, or not at all? So was it a change in date, change in the amount, change to the account it was deposited into, or was taken out of? So that's all our job is. And you can see in the offsets right here, it's never flying blind. Why is it offsetting that? Because it's going to cancel out this much interest, cancel out on this particular one, 5 payments off the back of the amortization schedule. So the arrows we look at as the secret sauce in the program that will lead us to this destination. So once again, on the action plan, did this happen as expected, differently, or not at all? And then once again, if we have a new action that's going to pop up, unexpected deposit, unexpected withdrawal, transfer between accounts. Action plan is going to be the action plan, the financial GPS instructions. It's created from these 2 accounts. The budget menu is exactly what it sounds like. Our expected income, these 2 get paid twice a month. This is their net amount per pay period, and their expenses. Expenses for our clients can be organized a bunch of different ways. I've got some clients that use one big bucket. I've got some clients that individually itemize every single thing. I've got some clients like this that use a few different buckets. What I tell clients is, we don't care as coaches, and the program doesn't care. We're going to do the same job. The program is going to do the same job. That's going to be organized according to how you like it. This is all revocable, meaning if you start one way with expenses, you can expand or contract according to personal preferences. Once this is set up, unless there's a permanent change to the budget, you're good to go here. In your account section, this is going to be where typical things like checking, savings accounts are, your liabilities. They have an auto loan, a Visa card, they have a first mortgage, a home equity line of credit. Anything that we needed to add into the account section, we can take on a new bank account, a new loan, a new mortgage. We can create assets for ourselves. One of the cool things here is, if we say, hey, this property, they have $325,000, and we can actually associate it with the first mortgage here. And we can save that, and we can start to build an asset section. And if it's tied into the equity, we can see our loan to value ratio here. So there's a lot this program can do besides the basic fundamentals of debt elimination. It can also create wealth. You can do those independently of each other or simultaneously at the same time. So once again, once this is set up, unless there's changes here or we're taking on new accounts, we're good to go. Same thing in the budget. We need to add income, expenses, or transfers here. It's all good. Once these 2 things are set up, it creates the action plan. We have a report section where we can learn more about our cash flow, our budget, our net worth, certain time frames of certain types of money transactions. We can search. All of these things are going to be more and more valuable based on the consistency of using this program over X period of time. What I usually tell clients is that about 60 or 90 days worth of data, we can start learning more and more in the report section about anything we want to learn about. Now, also in our settings over here, there's different things that we can organize. Your profile here, if your client needs to update, their username, password, security questions, it's all back there. If your clients want to receive notifications, they need to set up the notification, either email address, phone number, or both. They can get notified about a bunch of stuff, bills being due or whatever it is through this program. That's their personal preference to use that or not. And then we went through the preferences here. This is all getting it set up according to what we want. And then subscription settings. Remember, your clients, once they buy this program, there's nothing ever they need to add on to this. There's no upsells. They do have Account Connect if they like, which will go from having the action plan in an execution state versus so we, for example, we would execute this versus confirming. What's the difference? Confirming just means that just like when you log into your online bank account, you have your transactions. Same thing here with streamlining your transaction. Instead of executing, you're confirming that happened. Once again, that's a client choice. That's their prerogative, whether they choose to use that or not. You can usually get your clients a free 30 to 45-day trial. At the end of that, they'll know, does this have value? Does it not? About 50% of our clients use it, 50% of it don't. The determining factor will be the trial. Does this benefit you? Great, use it. Does it not? Then don't use it. This I want to highlight just for a minute because you have categories. And when you look at your action plan right here, you have a bunch of different categories here. So for example, like if I'm going to add a new action and I'm going to add a withdrawal, these are all parent categories: bills and utilities, business, education, entertainment, all the way down to vehicle transportation. Once you have the parent category, you have the subcategory. If your clients are ever looking for a parent or a subcategory that does not exist, it would be here. We can add a new parent category, a new subcategory, whatever it is that we want. So we can always edit or set this program up regardless of the framework and the templates any way that we want. And then also we can do the same thing with managed tags. Managed tags is a great way to organize your data for reports, tax purposes, whatever it is that we want. So for example, if I have business expense, if I have food and dining, business, if I have a waste of money, if I have, whatever it might be. So you can see all of these tags. You have default tags that are tax deductible vacation, but your clients can create as many tags as they want. And why is this valuable? Because we close this and we go back to our action plan and add that withdrawal. When we set it up, let's just say that we're taking, money from our savings. Let's say we're taking $750 for medical. Or let's say it's for some type of online business website. Let's just say that we were setting up a business website for ourselves. We're going to pay $750 on that. Well, now when we go to financial and accounting right here, let's just say we set it up that way and we save this. When we go to execute this stuff, you guys, you can see that down here, all of our tags. So if we have a business expense or whatever it might be, you can do multiples. Why is this valuable? Because when you tag and you organize your data accordingly, not only can this program do what it's designed to do, which is help you eliminate debt, convert that debt to wealth, but it's also going to help you organize your data. So at the end of the year, if you need to pull things for tax purposes, you want to pull certain things about how much money you spent on certain tags, how much money you wasted, whatever it is, this program can be as robust as someone wants it to be, or as simplistic as someone wants it to be. That's going to be the personal preference of your clients, but understand there's a bunch of stuff they can do. They have us as coaches. They also have live chat. They can call in. They can get somebody to connect from corporate through Zoom to help them out. So yes, they have us, but they also have a whole corporate support staff that can help them. They also have different ways in the action plan, your accounts overview, your budget overview. You can start running cash flow reports. Choose a milestone. What does this mean? Well, in this trip that we have, that's many, many years till we get paid off, like going on a road trip. Through that road trip, there may be stuff that you want to stop off and see. Within your financial journey, there's going to be smaller things that are happening. Getting the emergency fund built, getting your credit cards paid off. All of these, you can pick whatever one you want. Still going to show up in the action plan, but it gives you something else to concentrate on outside of the longer view of the trip. When you're in your budget, once again, you can do a lot of things. You can learn more about your budget accounts. There's a lot of stuff that can happen here. But basically what you guys want to understand is that this program is designed around what the client wants. It can be, a framework of simplistic, just action plan steps just to get them out of debt. If they're burdened by debt, they always want to get rid of it. But it can be as robust and complex as adding those tags, learning more about your money, learning more about your cash flow, whatever it might be. People that really use this program for all of its intended uses are going to get the most value possible out of it. People that use it just for the simplistic framework of mapping this out and using the action plan, they will get the value that they signed up for when they activated the program. But understand, there's a lot more inside this program that can be understood, learned, and used that will be beneficial for homeowners, business owners, married couples, whoever you're dealing with. This is their central cash management program that they want to anchor all of their finances around. Doesn't matter if they want to be debt-free. Doesn't matter if they want to accumulate real estate properties. Doesn't matter if they want to take a second honeymoon, build a business, whatever it is. That's unique and specific to them. We organize it in the program accordingly, and the program is going to tell us the shortest distance to getting them to that end destination. So guys, I hope this helps you. This is a relatively shorter meeting than normal, but I wanted to walk you through the Money Max account to make sure you guys understand that this program is the anchor. It's the central cash management system for your clients. And then as they learn more about it, they can add in whatever it is they want, do whatever it is they want, and really create a centralized system where they learn how to win the money game, beat the banks at their own game, and create a desired financial end outcome of their choosing with the shortest distance, what we call the most linear equation, to actually getting them there.